Starting now, you can get a transcript of each week's Rich Dad Radio Show. Just visit www.richdad.com/radio and download a copy today.
This is the Rich Dad Radio Show, the good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we have a very, I can't imagine a better book an author to talk about. And the book we're talking about today is a book called Collusion. And our guest is Nomi Prins. And if I could be so bold to say if she was in the room today in the sound booth, I would give her a big hug and a thank you for writing Collusion. Because for those of you who have been a follower of the Rich Dad Radio Show, you know I have been on it. I said, I want to know what the heck the central banks have been up to. And what Collusion did, it's the pieces are finally really getting crystal clear of what has been happening behind the scenes. And so I really want to thank Nomi because her book, Collusion, like everybody, like my friend James Rickards, he really put on what's happening inside the U.S. with the CIA, Defense Department, as well as currency wars. But Nomi explains what happened after 2008 when the U.S. Central Bank, the Fed, in my opinion, became a corrupt organization, printing literally trillions of dollars and flooding the world economy, disrupting the world economy. And what Nomi has done is says this is what's happened outside. So Collusion is a must-read for those of you who love, the books like The Creature from Jekyll Island, Currency Wars, Road to Ruin, Dollar Crisis, and now Collusion. So for those of you who listen to a Rich Dad, we've been around for 21 years now, and I've always said savers are losers. Well, you know how much hell I catch from that one? And then I say your house is not an asset. You know how much hell I catch for that? And then I say the 401k was one of the biggest ripoffs ever, and that a lot of people of my generation, the baby boomers, are about to lose everything if this market collapses, and I think it will. But I'm not really against savings, and I'm not against real estate, and I'm not against stocks. The problem is our money. The U.S. dollar, the peso, the yen, the yuan, the ruble, the euro, they're corrupted. And what Nomi has done is explain in excruciating detail, wonderful detail, how corrupt it is on a worldwide basis. So Collusion is a must-read for those who really want to understand money, because all Rich Dad was formed around was money, is what is money? And as I've always said, this is, what did they teach you about money at school? And generally the answer is nothing. And I found out that's not a mistake. Because if you understood money, you wouldn't do as the government's telling you to do. So this is a very, very important, against Nomi, again, if you were in the studio, I'd give you a big hug and thank you, because as a writer, I kind of suspect the blood, sweat, and tears you went through to write this book, Collusion. You've kept it simple but precise, and the dates and times and quotes are unbelievable. I just spent 10 days up in Alaska, and I had a lot of time. There's no TV, no Wi-Fi, nothing, and I went straight through your book. And your attention to detail is, like I said, I'm sure it was blood, sweat, and tears as you traveled the world to track down what happened after 2008, what happened when quantitative easing hit the world. So for those of you especially, she starts with the country of Mexico, then she goes to Brazil, and then she goes to Japan, China, and Europe. What happened when the U.S. Federal Reserve Bank started quantitative easing? The massive printing of money, which is why I've always said savers are losers. Any comments, Kim?
Yes, well, Nomi's definitely earned the right. Her book is Collusion, How Central Bankers Rigged the World. And she has earned the right because she's a renowned journalist, a former international investment banker, and before becoming a journalist and an author and speaker, she worked on Wall Street. She worked at Goldman Sachs, she worked at Bear Stearns in London, and she worked as a strategist at Lehman Brothers and an analyst at Chase Manhattan Bank. So she has definitely earned the right, and she knows what she's talking about. So I want to welcome you to the show, Nomi. Thank you so much for writing your book.
Thank you so much, both of you. I'm really honored to be on your show. You really have to know that, and thank you also for talking about the detail orientation, because I think to be very basic, the devil is in the details, and the details are what sort of help us or hurt us, and we just need to dig into things and rip things apart. So I deeply appreciate those comments as well.
You take this complicated thing called the global banking system and explain what's going on and how it seems to be getting worse and more corrupt. So can you tell us a little bit about your background and how you got into all of this?
Sure. So, I started out in banking really as a fluke, but I won't go into too much detail on that. I wanted to move to New York City. It seemed an appropriate place to do that with. I became a programmer. I'd gotten a degree in math, so I was very much on the sort of quantity side, the wonky side of banking when I started at Chase. And it was a way to sort of be a part of something. I didn't know a checking account, so I had no idea about banking per se, but just working on systems, working on programs as the banks were really evolving in terms of just the complexity of what they did with each other, what they did with their customers, and so forth. This was in the late 80s, and sort of through the years of moving from the U.S. actually very quickly into international banking and analysis throughout the time I spent in that career, it was always very important to me to analyze the risk. That was always what I did. So even though I was in a position where I realized banks were trying, as the years went on, to make more and more money out of more and more risky types of transactions, I always felt that analyzing, at least knowing what the downside was very important, and that was kind of my thing as I went about the different products. And I was always in the sort of more esoteric product areas anyway as they were developing. So I had a front seat there. Traveled a lot, and also really tried to keep track of that analysis of, in particular, credit risk and other types of risk throughout my career. And banking really changed dramatically over those years, but certainly in the beginning of the 2000s. With the different corporate crises that happened with Enron, with WorldCom, with people basically, being ushered into stocks and companies that weren't doing what they said they were doing, and banks helping them to not do what they said they were doing. And I knew this because I was working in them at the time, and I just got incredibly disillusioned with that entire process. It's one thing to make money; it's another thing to sort of screw up your customers. And so I left.
Yeah, but Nomi, you just weren't an analyst. You were the managing director of Goldman Sachs in the International Analysis Group, so I think you're really being a little modest here. But the reason is, and again, it fits that you would be a numbers person, because I just want to say to all the people out there, if you really want to understand, I would read Rickard's Currency Wars and The Road to Ruin, and then read Collusion, because what you will see is like what happened with all the biggest banks, but what happened with the Fed. It was like an explosion. It was like a thermonuclear device going off in 2008. And they went into the biggest money printing in world history. Would you say that's an accurate statement?
No, that's one of the reasons I wrote this. I don't think it was conceivable 10 years ago to think that a set of central banks led by the Federal Reserve with absolutely no limitations. I mean, just imagine you can print or electronically conjure up money, really forever at any amount that you decide, because literally this is what the Fed has done and can do. I mean, it has a $4.5 trillion book. In other words, it manufactured $4.5 trillion of money to buy really bad, junky assets from the banks and debt from the governments that was created in order to help the banks as well, with absolutely no accountability as to where that money went or the results or any ramification. And it wasn't just the Fed. It was the Bank of Japan. It was the European Central Bank. It was Bank of England. And it was, in different ways for different reasons, the People's Bank of China and so forth. And these institutions, some more connected to their government, some theoretically independent but not really, have undergone an epic, unprecedented amount of money manufacturing for literally no purpose beyond feeding it into the private system, the private banks, to effectively subsidize them. And that's never happened. I mean, cash has been created for things like financing wars or building massive infrastructure projects or so forth, but never have we had a period for so long, such a large amount across such a global group of entities and leaders and individuals as we've had over the past decade.
But the thing, yes, and the thing I love about your book is that you went country, well, not every country, you went from Mexico to Brazil to Japan to China to the EU, and you explained what happened when all this hot money, you call it, what, you have a different name for it.
Yeah, I call it different things. It's cheap, it's dark, it's hot. It's basically the idea of...
Conjured up. You call it conjured money.
Yes.
Yeah, and I call it just fake money. That's all I call it because that's my language. The blood, sweat, and tears you had to put in this to dumb it down for a person like me to be able to sit there for 5 days and go through chapter by chapter. And you can see my book is just highlighted and read, and I commented on it because it was different in every part of the world, right? This explosion of cash.
That's right, and that's why I actually specifically, and you'll get, as a writer, see how this works. But I basically did not have a chapter on the Fed, because the Fed was like the omnipresent character throughout all the rest of the chapters, and that was very intentional. I remember when I handed the book in, and my publisher was like, well, you talk about the People's Bank of China, the Central Bank of Mexico, Brazil, the European Central Bank, separately in chapters through those areas, but there's not a U.S. chapter. There's not a Fed chapter, because they're they're everywhere.
Yeah, so and that's what was so perfect about your book. It goes with Rickard's books and Duncan's books and all these guys, because you took it country by country outside the U.S.
And are you saying that the Fed is influencing or controlling all of the central banks?
Yes, that's right. And where they succeed is with the major central banks. And it's actually interesting because they're the major central banks from sort of the whole post-war World War II monetary policy system that's predicated on the dollar and Bretton Woods and everything. There's a real through line as to the ones with which the Fed has colluded successfully, i.e. when the Fed reduces rates, they reduce rates. When the Fed decides to raise rates a little bit, if it's going to create too many ripples in the market,
and specifically, you're talking
them.
Specifically, it's the Japanese central bank and the European central bank. And what you're saying in Collusion is how the whole new world has reordered around different banking structures, because what happened in 2008 when quantitative easing hit is the U.S. ripped off a lot of banks around the world. So would you say that's true? They're realigning their allegiances right now.
That's right. And they're effectively subsidizing those banks. Ours is in the United States as well as ones throughout the world through exporting its quantitative easing and cheap money policy to the rest of the world. I mean, it was Japan back in 2001 that originally sort of coined quantitative easing to help their banking system after a bunch of trials and errors over the 90s in restructuring some of it and making it safer for the Japanese. And what wound up happening was it was a very small amount. And when Ben Bernanke, who was the chair of the Fed at the time when this process started, this experiment, this collusion started in 2008, he was very particular, and I have this quote somewhere in the book, but of saying we're not doing what Japan is doing. This is totally different. We're calling it the same thing, but it's not.
I always thought that was funny because the U.S. oftentimes laughed at Japan when it collapsed in 1990. But we're doing what you're saying in Collusion is we're doing exactly what Japan started in 2001.
That's right, but we're doing it on
massive.
Nuclear. We're doing it on complete steroids.
And so in simple terms, Nomi, to the layman, what is the overall corruption? What is the overall collusion in a nutshell?
So our central bank, Bank of Japan, European Central Bank, are effectively working together to ensure that the cost of money to banks, not necessarily to people, is kept at zero on average. So if one raises rates, the other reduces it. Bank of Japan goes negative if the Fed comes up by a little bit in the cost of money that they set, that they can set. But in addition to doing that, they've also colluded to create money, to sort of electronically conjure money to go into the private banking system, to go into different asset markets. And because it's artificial, it's not money like people earned and like used and decided, oh, I like this company, I'm going to invest in this company, or anything old school like that. It's simply money that has been sort of helicoptered in. And it was interesting that term, helicopter Ben Bernanke, who sort of manifested this entire process when he was chair of the Fed in the wake of the financial crisis, is that idea. They've helicoptered money into the financial system, into the big banks throughout the world, or sometimes into major corporations. Now it's morphed. Sometimes it's into stocks. Now they basically decided, as central banks, non-elected, non-audited, non-transparent, non-productive entities, to conjure money and decide where they want to put it. And in that way, they've distorted all of the market.
So that's a big part of your book, and it's been part of my grind, is the Fed isn't really federal. It's basically a banking cartel. And what you're talking about here was that when the crash first came around 2008, when Lehman went down, is that President Bush, he asked permission to print $700 billion. Today, the Fed asks nobody for permission. Is that correct? They have more power than governments throughout the world. They can just print as much as they want.
That's exactly right. Nowhere in any of the laws that created them, the Federal Reserve Act of 1913, that was created literally in the wake of several years after a panic, a major crisis had happened in New York City, and the sort of kingpin at the time, J.P. Morgan, decided that at the end of the day, he did not trust the government to save the banks, and so he pushed, he was dead when the act was passed, but he pushed for this idea, as did others, both in the government and in the banking community, at the senior levels, the most elite levels, decide they needed this Federal Reserve, this sort of lender of last resort, this emergency place to get money, and they sold that basically to the American people as not that, but as something where if there was a crisis, banks would be able to provide money to people, but the money from Wall Street would go to Kansas, and it would go to farmers, and it would go to building bridges in California, and so forth. And if we didn't have a Fed protecting that ability of money to flow, there would be real problems in growing the country. That's how it was sold. The reality is it does not have a limitation as to how much money it can create. It had a sort of moral limitation in that there's an emergency clause in the act that says in an emergency you can do certain things, but it's very, very vague in the language, and they took it to the nth degree in the last 10 years, but there's no transparency. And the money they've created, the $4.5 trillion from the Fed, the $21 trillion throughout the central banks that have colluded around the world, is the size of the GDP, the entire production of the United States of America. They went a little crazy on this. And nowhere is there any indication that this process, this conjuring, has helped the real infrastructure, the real main economies of any of these countries. In fact, there's more evidence to the contrary.
So those of you listening to right now, we're talking to Nomi Prins. She's the author of this fantastic book. It's called Collusion. It's about what happened after quantitative easing, or QE. She calls it conjuring. I just simply call it fake money entered the system in the trillions of dollars, and its effect on different countries throughout the world. She starts with Mexico. So all of you in there who are listening to the Rich Dad Radio Show from Mexico, you should listen to it. We should read this book. And for those of you from Japan who listen to the Rich Dad Radio Show, you've got to listen to the book, because the Bank of Japan is the one who started quantitative easing, and now they've taken it to new heights.
And they always said, oh, that'll never happen here in America. Oh, that'll never happen here in Europe. It's happening.
And now the biggest ones are Bank of Japan, the Fed, and the ECB under Mario Draghi. And they're printing so much money, and people are still going out there. They're working hard for money. They're saving money. They're trying to buy a house. Prices are going up everywhere because they have to inflate the economy, or they can't pay for all the bills, and they put the money in the stock market.
And that's why I want to find out when we come back what, Nomi, how this collusion, what was the effect on Main Street, and what does the individual do, or how are they being specifically affected when we come back.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And once again, you can listen to this program anytime, anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com, and we archive them because repetition is how we learn best. You listen to this program again, you'll hear even more. Like if I read Collusion one more time, I'd see a whole new book inside there. So we archive our programs at richdadradio.com so you can listen to again, but especially this program. The reason we archive it at richdadradio.com is so you can get your friends, family, and business associates listen to this program, and if you discuss it, discussion takes your education to a whole nother level of understanding. Because this is a very, very important book. Our guest is Nomi Prins. Her book is Collusion, just released May 2018. I got an advanced copy of it. I spent 10 days freezing my butt off up in Alaska on a fishing boat, and I had all the time in the world to just power through this book. And it really put the final piece of the puzzle together for my education, which I have been following since Vietnam, when we took the dollar off the gold standard. And what Collusion explains is what happened after 2008, when the U.S. Federal Reserve Bank went into quantitative easing, a sophisticated term of saying printing fake money. And that's why at Rich Dad, I have said for years, since Rich Dad came out, savers are losers. Your house is not an asset, and stay out of that 401k, because when the house of cards comes down, you're going to get wiped out. And so I'm very happy to have our guest today, Nomi Prins. She's an insider from the dark side, Goldman and Lehman and all those guys, and she's seen it being developed as they conjured up this fake assets out there. I mean, they're just fake, and they're all predicated upon what's called counterparty. I mean, you have to do something, I have to do something. And when people stop doing what they have to do, the whole thing comes down. It just collapses. So it's a very important book to read, especially for those who are fans of James Rickards, Richard Duncan, and The Creature from Jekyll Island. It puts the final piece of the puzzle of what happened in countries like Mexico, Japan, Brazil, China, and the European Union. Comments, Kim?
Yes, so Nomi definitely is an insider and has earned the right to write this book because she worked on Wall Street at Goldman Sachs, at Bear Stearns in London, and at Lehman Brothers, and at Chase Manhattan Bank. So she has earned the right. And Nomi, I just want to ask, this whole collusion, all the corruption that's happened with the Fed, with the central banks, how has it played out on Main Street? Because if you listen to the talk shows, if you listen to the president, the economy's doing great, the stock market's up, housing prices are up, unemployment's down. People believe that the economy is doing great. Is it?
It is for the people that are at the top of those ladders.
Not so much for Main Street.
It's fine. Well, that's the whole thing. I mean, even if we look at the stock market, only about 10% of Americans own 84% of the stock market, and those numbers are not dissimilar throughout the major countries that have had their central banks sort of co-opt the funding for the people in that 10% or the smaller percentages of that 10% into the stock market. And so most people aren't benefiting anyway, just on the get-go. But then what happened was when these policies were put into play and interest rates were beaten down so that there could be money cheaply available to the banking system to basically hold it up. It meant that people who were saving money, for example, in regular savings accounts, because they were prudent and that's how they wanted to allocate some of their funds, weren't getting any interest on their money. And people who were investing in things like government bonds or pensions, investing in government bonds, who used to get an interest rate that kept up with inflation or actually gave them a bit more so that if their cost of living rose, they could have some more interest coming in on their savings to kind of help with that. They're all of a sudden getting zero. And they're paying the big banks for getting all this money for free and giving them 0% interest fees for the benefit of even keeping their money with these banks. And so that entire inversion did not help most people throughout the country. And then in terms of some of the other stats, the unemployment, yes, it's lower as a percentage, but the labor participation, people who are actively involved in the job market has fallen off. So as a result, that number looks better than it really is. And in many cases, people are working 2-3 jobs just to make the ends meet for what they used to work one job in, because of this sort of unalignment or realignment that's happened with money sort of washing in from the top from this artificial source, which is the central bank. So I think that's why when most people hear about how great on Main Street, exactly, hear about how great the economy is doing, they're like, well, wait a minute, I'm sort of trying to do the same things I used to do, but for some reason, it's just a little bit harder, and it's really hard to put your finger on it. But what it ultimately is, and this is why it ties back to the central banks and what they've done over the last 10 years, is that central banks have created a situation whereby money's cheap to the sort of main speculators that can use it, have access to it through the private big banks, and that cheapness is exactly what hurts the ordinary person, because they don't get interest, because they can't really grow in a sort of risk-free or risk-less manner their own wealth. And so that's why this entire exercise has not really provided real growth. And if we move that number up from an actual person to this lots of people, like an entire economy in a country, which is why I went around the world, in most places where quantitative easing has been most used, growth in those countries has been under 2% on average for 10 years.
But also,
been under,
the big thing I love about your book, Collusion, is you explain how the power structure of the world realigned. For example, Japan, because they started quantitative easing in 2001, they realigned with their enemies, China and Russia, because they have to do something different. So the powerful thing about your book, Collusion, is how the world's power structure has realigned now, and I think you're saying that China is going to take over.
Well, what China did, which is really interesting, and yes, they are. They've risen as a superpower in the wake of this 10 years of quantitative easing.
Can I say something else, Nomi? As I travel the world, too, the U.S., what you say, is like a loan shark. It goes in and just lends money to other bankers, where what the Chinese do, they're partners with the governments of these countries saying, we'll loan you money for real projects to enrich your country. Where the U.S. banks are like loan sharks going in, we'll give you cheap money, but if you screw up, we're gonna bankrupt you. This guy,
that is exactly what I have in my book that traces back to the central bank policy, because in the wake of 2008, 2009, when Fed went on this sort of quantitative easing spree, we didn't know how big it was going to get back then, right? But they clearly had no limit, and they were clearly, going to do whatever they thought they needed to do to achieve the results of subsidizing or saving the banking system. But what the Chinese did, and very, very publicly, which was something very different for the People's Bank of China, is they started to openly criticize at major G7 and forums, like in Davos and so forth. They openly started to criticize this policy and say, look, the Fed's creating the potential for a lot of risk and a lot of asset bubbles. I mean, they used this term like 8 years ago. And as a result of that, and again, one of the reasons I went to other countries is because a lot of the countries on the outside of the main core group of central banks colluding money to be so cheap, places like Brazil, places like Mexico, places like Southern Europe and so forth, they actively were concerned that this policy was happening because it put them at a disadvantage, and at the same time it was producing the possibility of much larger risks coming into the world. And the Chinese were very smart and said, look, we see this could be a problem. Japan, the Bank of Japan, even though they've been like crazy on quantitative easing from a central bank perspective, but some people, like former Ministry of Finance people who were involved in the restructuring of the banking system in Japan, were concerned. And as a result, they were sort of moved away from positions of influence on the new quantitative easing and able to express their concerns with real policy, and that became a problem. And so Japan and China did forge new relationships because they had to, because China was openly critical of the policy, and Japan, I think, was split between adopting the policy of the U.S. because of their close political and diplomatic alignment with the U.S. and saying, look, if something goes wrong, we need to sort of expand our trading partnerships,
right.
And that's where China comes in.
Yeah, and so China right now, The U.S. screwed up big time is what Nomi is saying in her brand new book, Collusion. The U.S., from my point of view, and Nomi's point of view, and Rickard's point of view, and Duncan's, and Ed Griffin, the creature from Jekyll Island, we've ripped off the world. And that's going to cause, and the world, what collusion explains is how it affected the rest of the world, and trading alliances are trading right now away from the dollar. But this is my question, because you're the insider in this whole thing. Let's play devil's advocate. You have this guy, Mario Draghi, who worked for Goldman also, as well as did Carney of the Bank of England, and I think everybody worked for Goldman at one time. But and you did too. The question is, you have this guy Bernanke and Draghi from the European Central Bank, who are graduates of MIT. They have PhDs from MIT. These guys are smarter than God. What if they're right, Nomi? Could they be right that printing money will save the world?
I don't think they're right, and that's because the world and the speculative financial system are not necessarily the same thing. And I think one of the things we're seeing today, even in some of the emerging market countries that have taken on so much debt, and basically because it was available at such cheap rates through
because
mostly
the U.S.
banks
the U.S.
and
is
the dollar.
Because
That's right.
Look, the U.S. is basically one of those payday loan companies. When you get paid, give us some money. They give you cheap money, but when the interest rates change, they get screwed, right? That's what happens to the people of Brazil and all these guys.
That's right. And so those countries are stuck. Their central banks can't do what the Fed has done, which is just manufacture money out of nowhere, because that would create actual inflation for their real people and actual demonstrations in the streets and all sorts of political unrest. So what they have to do is take the reserves that they have, the money they have in case of an emergency, and they have to use it, which is what they're starting to do now, to defend their money, to defend money that's coming from foreign speculators from leaving their country, defend their currency. It's like the opposite of currency wars. It's currency wars part two. And so they have to basically use their savings, their reserves, to defend the ramifications.
And when you say
they
defend,
they have to preserve. They have to defend their own money with their money.
And what does that mean?
That's a currency war.
What does that mean? They defend. What are they doing?
So what they do is they have to raise rates to really high levels, and they do that.
That crushes the economy of the country.
Exactly. So it hurts the main economy because then nobody can borrow anything. And this is what was happening actually throughout the years, is that there was an internal banking and an external, what you saw publicly. So, for example, in Mexico, a real small business owner who had a bunch of farms and wanted to expand, or tractors or whatever, couldn't actually borrow money in order to do that. And that was part of the problem, whereas the people that could manufacture money had no problem with access to that money. And so that's one of the things that happened throughout this process, is this inequality shift. And this is another reason I don't think what Draghi and Ben Bernanke have created is going to work in the long run for real people. It's already not.
So, let's say they're wrong and we're right. How's this thing going to end?
Yeah.
Yeah, so we look at the debt. I mean, it always happens with debt first. I mean, the stock markets move up or down very quickly in reactions to sort of momentary
spikes,
cash flows or stories or spikes or whatever. The debt market's very different because that's real. That's real countries. That's real people. That's real companies having borrowed real money that they have to repay. And when things start spiking, if interest rates just go up a little bit, or before the dollar gets crushed, it strengthens a little bit. All these emerging market countries in particular have borrowed money, that have extended themselves because they had to be involved in this world where money was so cheaply available to sort of the core of that world. They had to compete with something completely unnatural, and so therefore they took on more debt than they could otherwise service with their own economies. And when the unwind happens on that, it happens very quickly because all of a sudden their economy is not producing enough to basically service their debt payments. Their currency is getting crushed. Capital is flowing out because of all these negative ramifications. And all of a sudden, all these emerging market countries and sort of pseudo-developed countries throughout the world are having major economic problems, all because they were forced to be involved in this money fabrication scheme from the core countries. And that ends with a lot of economic hardship, a lot of markets deteriorating, a lot of debt not being able to be repaid and defaulting, a lot of asset prices crashing. And that's when we have a real problem. That's why preserving what we have now is an important way of deterring against being too hit by that eventuality.
So once again, ladies and gentlemen, we're listening to Nomi Prins. Her book is called Collusion. And for those of you who are followers of the Rich Dad radio show, because, for years I've said savers are losers, and they're savers now, said your house is not an asset because it's based upon this bubble. And right now the real estate market is bubbling and the stock market is bubbling. And this concerns me. Does it concern you also, Nomi?
It concerns you because a bubble by nature, just the physical nature of a bubble is the walls of that bubble are very tenuous. They're very fragile. And the bubbles themselves have been inflated by not real production, not real profits, not real revenues, but real, to use your term, real fake money. And as a result, when they do pop, they're popping from being like larger and even more fragile than if it was simply a speculative bubble with real people putting real money or even companies putting their money into the markets. This has been extra money that's manufactured for that specific purpose.
And what you're saying is that money was manufactured for the big six banks, not for us.
It was absolutely the big six banks who paid fines for all sorts of crimes and continue to do so over the years were basically rewarded with
more money,
a wash of cheap money, and a global policy to keep it going.
So Dodd-Frank being repealed, what does that mean or in the process of being repealed, what does that mean to you?
That just means, again, this money came in with no ties, right? We didn't restructure the banking system. We didn't go back to Glass-Steagall. All the banks still have a tie on loans and deposits as basically, sort of collateral to any of the other stuff they need when they screw up. And so that has continued because Dodd-Frank was never strong enough to handle that. But they had some restrictions that were in Dodd-Frank in terms of reporting, in terms of the size of banks that had to basically provide exit strategies or sort of living wills for when they did run into problems, actually to have, just a plan. And now a lot of them don't have to do that. And
wasn't it just to blame the banks?
Well, basically, yeah, but the problem was that the repeal of the act was sold to supposedly help the community banks and the ones that actually lend to the people and so forth. But the reality is all this has done is allow, and you'll see this, the bigger banks to just buy up the smaller banks and basically incorporate them in such a way that they have less restrictions because they own these small banks.
To me, it's ridiculous. But could you explain what Dodd-Frank was saying, what that bill was? Because I never really understood it.
Yeah, so there was what Dodd-Frank was saying was that the big banks who were at the core of the financial crisis and who sort of, hurt so many people in so many ways, had to somehow be held accountable. And there's lots of pages in Dodd-Frank where they say that they can't, for example, be as speculative as traders because they traded a lot of derivatives and so forth around the mortgage market. And so there was some curtailment of those. There was a requirement, which was just beaten back by Congress, for the bigger banks to report on a regular basis what they call the living will. So, for example, they would have to show certain scenarios, like if this happens in the market, if this happens to our books, if this happens to employment, well, we're going to have so much money to cover the losses, and so therefore, ostensibly, we're not going to come to the government for it.
But the way I saw it was they were blaming the wrong guy. It goes back to the central banks anyway, right?
Well, exactly, because central banks, so the banks under this living will were supposed to report to the Fed how they were doing, and the Fed was supposed to say, you get an A or you get an F, right? But yes,
The book Collusion is the Fed was colluding with the big six banks in America, but the little banks were being squeezed out of money anyway.
That's right, because when money stops, it stops
at the big banks.
At the top.
Yeah.
That's right. And the big banks were the ones that were most scared. They're the most leveraged. They were most extended. And they, with some friends at the New York Fed and the Fed and so forth, decided that they need to find a way to subsidize themselves. Hence QE, or the Fed creating or conjuring money to buy their assets, was born and continued and just grew. It allowed the banks to come back. It allowed the banks to get rid of the junk that was literally like just festering on their balance sheets, on their books at the time, that no one would buy because the game was up.
Because they weren't assets.
They were worthless, and the Fed came in and said, you know what, we're going to buy those worthless assets with 100 cents on the dollar. They might be worth 10 or 20. Yeah, we're going to create money and we're going to overpay you, and that had the effect of allowing the banks to A, get money, and B, overvalue all the junk they had left on their books that the Fed didn't take, because they're like, hey, if the Fed's going to buy it for $1, then 100 cents, and we'll mark everything up to 100 cents.
And then Kim and I have been invited to join banks and all these things and small banks. So what are our small banking friends saying right now about this repeal of Dodd-Frank? It's not repealed yet, but it's in the process of. And they think that the Fed is really here to help them, or the big banks are to help them. But the problem is, as you're saying in Collusion, is the Fed has more power than the government because they're beyond government control. Is that correct?
The Fed does have more power than the government. They're beyond control. They're beyond limitation, and they're beyond accountability or auditing. So they literally can do and create as much money as they feel they need to plug as many holes as they either see or foresee or don't exist yet. And that's what they've been able to do with the $4.5 trillion manufacturing, just of the Fed, not other central banks, of money that goes into the private banking system. When the big six banks, that's Bank of America, Citigroup, Wells Fargo, J.P. Morgan, Morgan Stanley, and Goldman Sachs were at their sort of darkest hour. None of them wanted to be the next bankrupt bank like Lehman Brothers and like Bear Stearns and like ultimately Merrill Lynch, who was bought by Bank of America. They said, look, we need some cash. And the Fed said, okay, fine, no strings attached. It doesn't have to go to real people. We don't care what you do with it. Here you go.
But the U.S. government had no say in that. That's your big point.
That's correct. There was no say from the U.S. government in the amount, in how the money was spent, in whether these banks were also committing crimes at the same time, and if therefore they should be curtailed in terms of the amount of money they could get. None of that. There was no restriction.
So right now the small banks are saying, "Oh, good, Dodd-Frank's being repealed, and now we can actually lend to the people."
We'll have less regulation. All of this.
So the problem is, and this is also in how the narrative went. Dodd-Frank was by no means perfect at all. It didn't really stop most of the trading banks were doing. It did not really detach at all, actually not even really at all, deposits and loans of people from the other speculative activities of the big banks. In fact, the big banks have become bigger under Dodd-Frank. So for one thing, Dodd-Frank was never perfect. It did create a Consumer Financial Protection Bureau to further look at how people were being treated by banks, and it's had some cases, it's won them. But in general, it also required all these reports from banks and for capital or money to be set aside if banks did risky things. Now, community banks don't.
Right, but to me, I like to just net it out. It's a smoke screen, because the real problem, what you're saying, is that the central banks like Bank of Japan, the Fed, and the ECB, European central banks, have more power than the U.S. anyway. They do what they want to do. That's right, they do.
So and they decide, yeah.
So this is quantitative easing bought up all these fake assets, junk. Now, they bought bonds. Doesn't that mean, this is my question to you, when they buy a bond from the Treasury, the U.S. government, a 10-year, whatever they do, isn't that an IOU from the taxpayer? Isn't on the other side of the trade of the asset, the liability, if they screw up, the taxpayer's going to ultimately pay for it?
Well, that's exactly right, because what they did, and this is how insidious this is, I break it down in the book, but the government issues debt. So the government borrows money to function from the future.
From taxpayers. From taxpayers.
From taxpayers in the future.
Right.
And so what happens is the Fed, in this instance, a quantitative easing, produced money out of nowhere to buy the debt the bonds that the government created, that they gave to the private banks. The role of private banks is to take that debt and sell it. Take those bonds and sell them.
So if it all screws up again, the taxpayer's on the hook, aren't they?
Well, yeah, for two reasons, yes. One, because the banking system has not been reformed, so if it screws up again, they're just going to need more money, because now they wouldn't. Now they'd be weak from a higher level. Right now they've been subsidized by the Fed for so many years, so now if they screw up, they need even more money from the Fed and from the government to produce, a sort of artificial stability, number one. And number two, the government was able to borrow more money from the future, from taxpayers, from future generations.
To give to the rich.
Because
the Fed was conjuring money to take it on their books from the big banks and give the money today. So government borrowing from the future for the Fed to give money today to the banks. That's what quantitative easing is. When government bonds, which they were, are involved in quantitative easing. It's the government borrowing, Fed producing money, giving it to the banks.
So if this whole thing implodes and it all crashes and they need money from the taxpayers and the taxpayers have to bail out the government, how are they going to do that? How are they going to get money from the taxpayers?
Well, I think they're going to do exactly what they've been doing, which is one of the reasons quantitative easing hasn't ended for 10 years, which is that these central banks, again, unaccounted for, unlimited, irresponsible, unaudited, will be able to conjure more money if they feel they need to, which they will in another emergency situation, because that's what they've done. That's the only game they know. And because of that, the governments will be forced to borrow even more from the future to keep things operational at the sort of federal, at the operating a country level. And the Fed will subsidize it for now, but push it into the future on people.
And that's the taxpayer. So once again, the book is Collusion. Our guest today is Nomi Prins. I suggest everybody get this book and read it. I mean, she has done a fantastic job of taking the extremely complex and dumbing it down so a person like me can read and understand it. But you definitely cannot speed read this book. I mean, it takes understanding.
What's the average person do? What can we do? Anything?
Well, besides honestly reading and becoming aware that people aren't imagining their economic instability is used to their advantage. The fact that they know that central banks are doing this, that rates are driven cheap artificially, and actually find ways to protect themselves and their own wealth that don't involve being as speculative, that involve hard assets, that involve really taking a look at reducing their own debt burdens and looking at doing the exact opposite of what governments have had the luxury of doing because the Fed's involved for their own personal finances.
So, Nomi, I really, really thank you. Again, her book is Collusion. It's how central bankers rigged the world and the beauty of collusion. It starts, you don't really cover the Fed, but you explain what happened after 2008 and why all of us, the little people, as they say, have been ripped off by the biggest banks in the world who are not accountable to any government in the world. They have more power than all the governments in the world. And the reason you want to read Collusion is exactly as Nomi says, is to become more aware and really start making up your mind. Are you going to keep, doing the same old advice, which is save money, buy a house because it's an asset, and invest in the stock market, which is completely in a bubble today? So, Nomi, thank you very much.
Thank you, Nomi.
Thank you.
Ask Robert will turn next week. I thank you all for listening. Please get her book. It's a very important book. Thank you very much.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com, corporatedirect.com.